This is Hashtag Finance, presented to you by the Canadian Securities Exchange, the exchange for entrepreneurs. With your host, Barrington Miller.
Hi, welcome to an edition of Hashtag Finance. I'm your host, Barrington Miller, with the Canadian Securities Exchange, and I'm the Director of Listed Company Services at the Exchange. Today, we are here with Paul Rosen, recently named CEO of 1933 Industries. How are you doing, Paul?
Good, Barrington. Great to see you again. How are you today?
I'm doing great. For those just joining us, or for those who have been under a rock for the past number of years on the cannabis scene, Mr. Rosen has been called everything from an oracle to an entrepreneur to those are the names I'm going to stick with.
I'm going to put Oracle right on my business card.
Absolutely. But this latest venture is very new and exciting. Paul, before we jump right in, tell us a little bit about your background, because you've been on the scene for a while.
I have. Thank you. I appreciate it. I'll try to do this succinctly without sounding too self-aggrandizing. But I'm just a good old Canadian kid from Toronto. Grew up and went to public schools in Toronto. I had the benefit of a good education. I got a degree from UWO, University of Western Ontario, in economics. And then I was fortunate to be able to attend University of Toronto Law School, where I graduated in the late 1980s. And I began my career as a practicing attorney. I was a constitutional and criminal lawyer. And it was then that I first sort of brushed up against what was the previous Canadian medical marijuana industry, which was not an industry at all. It was a grow your own program that the government of the day brought in after a constitutional challenge, gave patients with the support of their physician the rights to access medical marijuana. And I was a constitutional lawyer, so those cases were relevant to what I was doing. But at that time, the idea of an industry was, far-fetched. There was no there. I left law because sort of unexpectedly, I started what I guess is now called a side hustle. I started a management business that actually happily is still in business 22 years later. And in the late 90s, I made a decision to try to just pursue a business career. I tried to coexist. I ran my legal practice, which I was a sole practitioner, and my new business, but it was impossible to do either at the level I wanted to do. So I made the decision to go into business, and I actually never went back to law, even though I'm still a member of the Law Society. And so I'm just like, I was a good small business person running my own self-funded company that grew year after year and provided a good living. And then along came cannabis in 2012. And that's when the then Harper government, our previous government, began to articulate bringing a commercial cannabis licensing program. And that blew my mind, if you will, the idea that you could get a license to commercially cultivate cannabis. And I was one of the, I and some of my colleagues came together and formed a company. We called it Hortican Incorporated, terrible name, I know. And we set out to invest in companies that were going to apply for one of these new licenses. It should be noted that we started this company before the government had even published what's now called the MMPR, or was previously called the MMPR, in the Gazette. So we knew it was coming, but we started to raise capital and deploy it even before the government had formally iterated their program. And we were pretty good and maybe a little bit lucky. It's good to be both, in that we made a number of investments in Canada early, all of which got licenses in that sort of first freshman class of Canadian licenses, of which there were only like 15 for the first couple of years.
Right.
We invested in a company called Peace Naturals, got a license. One of the first, Whistler Medical Marijuana, got a license. Abcan got a license. Hydropothecary, now called Hexa, got a license. We bought in the zone. It's the first time anyone's bought a full LP, licensed producer, in Canada. We paid $2.7 million for a license when there was only 11 in the country, with 13 acres of land in the Okanagan Valley. We went public with that company. We changed the name from Hortican to PharmaCan Capital, maybe even a worse name. No one in cannabis was great at naming companies back in the day. Maybe Tweed was a good name, but we were part of that first early wave of companies. I think we were the fourth or fifth company to go public in Canada. Sorry to say, we went public on the venture, not on the CSE, through a CPC CRTO, that's a Capital Pro Corporation reverse takeover. And lo and behold, from this idea of starting a company to open in the Toronto Stock Exchange took about 2 years. And I was the president and the CEO of that company for about the first 4 years. I departed after 4 hard years, because it's a hard industry. It takes a lot out of you. And I was living my life on a plane. I departed as CEO in May of 2016, shortly after the company renamed itself again, now known as the Chronos Group, obviously one of the better known and well capitalized companies in global cannabis. At that point, I had put my other company into good stewardship with my business partner taking over my previous role of CEO, and I was fully all in, and likely for the rest of my career will be all in the cannabis industry, in that it's just so dynamic, potentially accretive, and full of all sorts of great opportunity and great challenges, which are conditions that I like as an entrepreneur. And I've done quite a few other ventures. I was sat on a number of boards. I started Title Royalty Corporation, which was acquired, is now trading on your exchange under the name Red, White, and Bloom. Yep. I started a food company in California, edible company doing really well called Pantry. We just announced the deal to come to Canada. And I'm the executive chairman of a global cannabis advisory based in Los Angeles called Global Go. And to take us full circle to 1933, I made a meaningful investment into that company we'll call it a year and a half ago, and was close, a meaningful enough investment that I paid close attention to the company. It was a passive investment to start, but I started providing advisory to the company. And I agreed last month to take the role of interim CEO. I say interim because it's understood that there may be a transition from me, but right now I am acting and working very aggressively at 1933, along with a few new co-executives that I recruited, a great gentleman named Eugene Ruiz, who's our president, and we're really working hard to give that company the future and the runway that I think it deserves and likely will inherit.
Well, I know the shareholders and the patients and the people that are with and associated with 1933 are glad of your increased presence there. Now let's talk a little bit about Cannabis 2.0, Cannabis 3.0. We've seen it. We did essentially 520 in the month of May, where we interviewed a number of CEOs and companies. And everyone has talked about the levels that cannabis has gone through, but very rarely are we talking about the levels of change that are happening within management. Because right now it is completely Cannabis 2.0 on the management level. Everyone or almost everyone who was there at the beginning has either moved on or no longer there, or taken on a different role. Can you?
Very true.
You yourself are representative of that, and is that just part of the industry? Is that just a natural cycle? Do you see this continuing?
Yeah, I think it is. I think, in some ways it's not that unexpected. You might use that adage, different horses for different courses. I don't really necessarily think that's the whole explanation, but I'll say that freshman class of Canadian CEOs, of which I was one, Bruce Linton, Terry Booth, just to name a few well-known personalities. Yeah. None of us are running the companies that we founded today. Chuck, as another example.
John Fowler.
Vic Newfield at Afria. So this is, in some sense, I think it has to do with the sort of the incredible arc of cannabis from what was an area of curiosity in 2013 to an area of no interest, really. The markets were really tepid till Justin Trudeau became prime minister. And then there was, what can only be described as a certain amount of irrational exuberance, maybe not irrational, but a lot of exuberance. And there was definitely sort of almost a hysterical era in cannabis, where the banks were able to raise extraordinary amounts of money, and companies spent that money. Whether they spent it wisely or not, history will say. I will say that we were very entrepreneurial, and now that is sort of like what I call the thrust. Getting a business onto the launch pad and getting it off that launch pad is certain type of scale. Once it's maybe orbiting through space, it requires a different type of navigation skills. That's not always the case. There are some great founders. Jeff Bezos is going to run, Amazon today. Put him in, maybe for the rest of it, for the foreseeable future. And it's not uncommon in startup culture, if there's any sort of capital crisis in an industry and a sort of a reset, which is what happened, valuations reset, it's not uncommon to seek management change. You may sometimes say a CEO of a public company is not unlike the coach of a professional sports team, in that whether you're a great coach or not, if you have losing season after losing season as measured by your stock performance or your quarterly earnings performance, it's a good chance that they're going to make a change.
Right.
So I do think that there's something to what you're saying. I think that the bellwether moment, and I've spoke about this a great deal, is when Constellation decided to replace Bruce Linton as CEO, because Bruce really was a leader and a visionary in our industry. And I sometimes would use the analogy that it was like that epic house party that everyone was having the best time at. There's been like 5 movies about this. And then all of a sudden, either the police or the parents show up, and they turn the lights on, and they don't exactly love what they see going on. And so you could call it the adults have shown up. These are all just analogies, but there has been a lot of turnover in the US too. You've seen a lot of change. And so I might say, and this is just a pet theory, that the crazy type of entrepreneur to start cannabis businesses long before it was popular and long before it was vogue had a certain vision and really had a certain risk on approach to business and their career that allowed them to thrive in cannabis. And now as a more legitimate and more mature industry, we're really returning to sort of bedrock business principles, and maybe some of those entrepreneurial instincts needed to be pulled back a little bit to focus on more fundamental bedrock economics like profitability, as one example.
This is a great transition point, because I was watching, for our listeners, if you want to see earlier interviews with Paul Rosen and our very good colleague Phil Shum, please check out CSE_TV on YouTube. Don't forget to subscribe. You can also check us out on the blog at www.thecse.com. Now, in that interview, you were talking about the shift of personas from the leaders of these companies, from, I don't know if it was entrepreneurship, but from one level to the capital markets level, it was the operator, from being an operator to now being in capital markets. You have that experience with both, and now
it's like a new company. This is the thing, is that there were so many companies in Canada that were inveigled, if you will, to go public, and I've done it. Started companies that went public twice, and I'm now running a third public company. I recall the night before we went public at Title Royalty, everyone was, all the youngers in the organization, I was always the most senior member, were understandably buoyant, as they should be. This is a career milestone that very few people will achieve. And then I had to sort of break the bad news to them. Tomorrow, we have to start a new company, the public company. And a lot of the skills that served us well running our operating company are not necessarily the same skills that we're going to need to run our public company. And now we're going to have to, how we didn't have enough bandwidth anyways to do our job. Now we have to extend that bandwidth further, because we have to do meaningful IR, and we have to spend capital on maintaining a public listing. And so it does, in my opinion, not every company should go public, but in the cannabis industry, quite frankly, it was a quid pro quo. If you want the money, you have to have liquidity. And I feel that that actually has damaged the fortunes of all sorts of otherwise credible companies that just have not been able to withstand the extra expense and the distraction of having to run a public company. And generally, my rule would be, what's the business case for going public? Tell me how your business is going to be improved by going public. And if the only answer is there is no business case, but we needed to raise money, it's not a wrong answer, because if you can't raise money, maybe you can't actually have a business. But I would encourage anyone to seek alternates if that's the only reason to go public. On the other hand, it does create some advantages for a company. You can use your stock as a currency to do M&A. That's a potentially good advantage. The reason I sometimes, as an entrepreneur, one thing we love to do, Barrington, is tell our own stories. And it's very easy for me to get excited in good faith about a business I'm working on and to discuss the value of that business with investors. Once you go public, you sort of lose the valuation narrative. You are what you are worth according to the public market.
Right.
And then so that leads to a phenomenon where remarkably every CEO of every public company in the world believes their stock's undervalued.
Oh, I have yet to meet one that has said, I'm way overvalued. My stock price is way too high.
Elon tweeted he was overvalued, and then his stock doubled.
That's he's a separate conversation. He's
from another planet. His brain's too big. But generally, I fundamentally believe every company I run is a public company. I didn't say it as a talking, but I believe we were undervalued. I think 1933 is spectacularly undervalued. That's what I think. I'm not saying that's, other people can disagree, but I think it's undervalued, just like I felt that PharmaCan, now Chronos, was undervalued when I was running it. I believe I proved right because of the huge run up in value over time.
Right.
It's an interesting point you raise about the challenges of a public company. On the other hand, there's opportunities available to public companies that private companies don't have. It's a balance, and some companies are meant to go public and some ought not to have in the cannabis industry.
Yeah, we're in the midst of a global pandemic that has shifted a lot of things, to just put it mildly. I think that the pandemic has really helped some public cannabis companies. We've seen their balance sheets strengthen. We've seen more opportunities arise. 1933, how are you guys doing? And
yeah, I think what it's doing, few thoughts on that. One is that the cannabis industry writ large is holding up quite well during COVID, meaning that the demand for our product has not slackened. Meaning that actually, I'll argue, demand consumption has gone up for a whole number of reasons: stress relief, more private time at home. But what it has done is I think it's made a trend that was already happening in cannabis was accelerated, and that is that you better clean up your balance sheet.
100%.
We had a lot of messy balance sheets, but if the music was still playing, there may not have been the necessary urgency. And I will argue that while COVID is, of course, a true, global healthcare tragedy, the loss of life is staggering, and the loss to our economy is staggering. But if there is a silver lining on that dark cloud for our industry, the cannabis industry, one is that we've held up really well. I mean, the business of cannabis is growing QOQ, regardless of COVID or not. But also, it's hastened the need to take your balance sheet more seriously. And in 1933. That's the first thing I needed to work on. Was I felt that our balance sheet needed to be improved, just like most cannabis balance sheets needed to be improved. In our case, it means working towards debt reduction and working towards improving our, just the overhang of the convertible debt that we passed amendments to convert at a lower price, and with all sorts of other features that'll give us some relief, and likely it will lead to a capital raise imminently. So it's really forced us in 1933, in the brief time that I've taken on the role of CEO, to get very serious in the here and now, and to put sort of hope and wish beyond and focus on what we control now. We have a lot we can control right now. We have a very good asset capable of being quite profitable if we run it well. And so I would say that, and you've seen this in other companies, put aside everything that doesn't relate to immediate or near-term profitability, whether that's Canopy pulling up stakes in multiple jurisdictions, same thing with Afria, same thing with Aurora, and focusing on the here and now. I feel that is good advice for all cannabis companies, or really all companies in the world right now that are affected by COVID. At my other industry, non-related to cannabis, we're watching our balance sheet. We have a very healthy balance sheet, but we're doing everything we can to prepare for the unknown. So the COVID is going to accelerate a trend that was already happening. And those that don't figure out the trend line are not figuring out at their own peril. At 1933, I am laser focused on optimizing our top line, minimizing our bottom line, and making it as attractive as possible to go forward.
1933 is in Las Vegas, and that has been that has been hit. That's one of the places that has been hit hardest as far as the economy, as far as the industry. We have a few listed companies that are in the Las Vegas, Nevada region.
One, Planet 13. There's two right now off the top.
Yeah, no, there's what's that landscape looking like?
And now I'll speak for the exactly. So even forgetting about the cannabis industry, you're quite right, Barrington. Las Vegas is probably the most tourist dependent economy in the world, in that it doesn't have, like New York may have a massive tourist, or Paris may have a massive tourist economy, but it's just one of many industries. And Las Vegas, the tourist industry is the largest economic engine. It is what drives employment, and it is what drives GDP growth. And therefore, when people stop traveling completely, and all the casinos and hotels had to physically close their doors, it caused great distress to the overall economy of Nevada. What exacerbated it for the cannabis industry was that the authorities decided to close the dispensaries as well. And that was sort of anomalous across the United States, because mostly cannabis and the dispensaries were considered an essential service. And there are 33 jurisdictions in America that have legal or recreational cannabis programs. 31 kept their dispensaries open. One of them, Massachusetts, shuttered their kept their medical dispensaries open, and Las Vegas just closed all their dispensaries. And while demand did not drop off a cliff, the ability to service that demand was severely compromised. It took a while for companies to figure out ways to get their product to market if you couldn't physically walk into, say, Planet 13, a huge dispensary that can serve 3,000 patients a day. Curbside could not completely fill that. Happily, and hopefully this is a trend that will continue, Las Vegas has cautiously reopened. Hotels are open at approximately 50% capacity. Dispensaries are open. And at the macro data, I think you'll see that April was probably the low point for the economy generally, for the cannabis economy certainly. And I think you'll see for the overall economy of Las Vegas, which until then was, in my opinion, and I have facts to back this up, maybe the most desirable market of all in America for a number of reasons. Largely just the price still was one of the highest priced products in the market, because supply and demand economics are favorable. And you have a culture of tourists not really being that cost conscious when they're on holiday. It's that just let's have as much fun as we can. So Vegas will bounce back, but it definitely took it on the chin, to your point. It is working its way back. It's not at 100% capacity, but it's quite a bit further than it was, say, in April. And we all, hope and pray that the virus does not cause the need to close the whole city again. And that's really the for all of us, that is a wild card, is COVID for any business, absent Zoom and a few others, not just Zoom, but in a few others. It's you have to prepare. You just don't know. It's this great unknown. And the world that we live in today, had I hypothesized 5 months ago this is what the world's going to look like, I think people would have said that's like insane or science fiction. But I would say Las Vegas has turned the corner. And I think that what we are getting better is figuring out a hybrid approach where it's not all or nothing. Nobody go out, everybody go out. And we're going to have to figure out an approach that allows the economy to continue, because that's in the best interest of the nation's health as well, while also protecting our vulnerable populations. And so far, at least Las Vegas hasn't yet shown up as one of those other jurisdictions that are having these crazy spikes, like Texas, Arizona until recently,
Florida.
Yeah.
You mentioned about the economy and getting it started or restarted or picking up the pace. We have legalization that's always just looming, that's always there. My next sort of line of questioning and area that I want to go to has to do with legalization versus banking. Which one do you want to see first? The election coming up in November, if you want to talk some politics. I'm really surprised that this whole thing hasn't spurred the legalization talk. even more. But what's your wish list out of the two?
I agree.
Let's go to that one first.
Yeah, a lot to unpack there. So number one, I fundamentally believe that the economic tumult caused by COVID is going to hasten cannabis reform at a global basis. People look at the tax revenue, other states or governors or legislatures look at the tax revenue that Colorado is enjoying, Oregon is enjoying, Washington State's enjoying, even Illinois collected $50 million of tax revenue since they went rec. Never mind all the people they employ, and who would not want that? You're achieving so many policy goals: employment, paying taxes, patient safety, and social justice, in that when we stop arresting people for cannabis possession, it will improve social justice, because regrettably it's the case that visible minorities are prosecuted at a disproportionate ratio than white people. So that's a social justice issue. So all these things that are roiling our society right now, the economic impact of COVID, the aftermath of George Floyd and Breonna, etc. Cannabis has a partial, not full solution to some of these problems. So now to answer your question specifically, I would welcome descheduling cannabis. I would welcome the passing of the SAFE Act. Both of those would be massive risk-on events. That is to say, they would invite the introduction of huge pockets of capital that know inevitably that they're going to enter the cannabis industry, but can't do it yet until it's essentially federally legal, or at least where there's a clear sign that federal legal or the end of sort of illegal cannabis is coming. And I think it's coming sooner rather than later. I would not be surprised if both parties between now and the election in November ran on a more aggressive cannabis platform. Biden for sure. I know he's still on the only decriminalize, but in a close election, this is a winning issue. This is an issue that is popular on both sides of the aisle, left and right, Republican and Democrat, coast and middle of America. To use a line I often trot out, when you combine red and blue, you get the color green. We all know that from kindergarten. And when you combine Republican mentality and Democratic mentality on this file, it all produces the same color green. So it should be noted, Barrington, that the prohibition, the end of the alcohol prohibition in the United States, happened in the teeth of the Great Depression, because the government saw the economic benefit, never mind the social good that could come from taking an industry that was doing a lot of business in an unregulated market and turning it into a taxable, regulated, authenticated market. So when this happens, and I say when, not if, whether it's safe or even all the way to descheduling cannabis, I predict that that is going to create an incredible opportunity for both investors and entrepreneurs, because there's going to be, we saw this in Canada, right? If you happen to look and see the state of the 7 or 8 public companies in Canada, that what their stock prices look like the day after Justin Trudeau became prime minister, you'll see that they all that morning had epic runs. Now they gave it back, but ultimately they went way beyond those highs. So right. What really activated the Canadian cannabis industry and made it what it is today, a Goliath, wasn't the MMPR, it was federal legalization. And it's allowed Canada to play an epic role in the center of the global cannabis industry, exporting products, acquiring licenses in new jurisdictions, doing JV deals to bring other brands into Canada. It's all fermented, and also being able to raise capital. One of my earliest large investors was a US hedge fund back at Chronos, or PharmaCan as we called it then, and they couldn't enter the US market, but they totally understood that the cannabis economy was going to be massive, so they went to where they could invest legally. That was Canada. When the US becomes game on, it's going to create
it's still the biggest opportunity around. I don't care what anyone says. It's the focus still is and should be the U.S. cannabis story.
Yeah. So I'm, at 1933, and I'd say this is a goal of every U.S. operator, big or small, MSO or not. We want to be as healthy as possible, as profitable as possible, and have the right sort of team in place to fully realize what that opportunity will mean for us. And it's coming in the next couple of years. I can't imagine it'll be much later than at latest 2022. That's what David Klein, the current CEO of Canopy, said. I would say that's the latest. We'll see meaningful federal reform, whether it's an act of Congress being signed into law by the president, such as SAFE or states, or whether it's the full-blown descheduling of cannabis. It's imminent, and it's going to separate those companies that can swim at that point are going to have incredibly bright prospects. And so certainly in 1933, we're making sure within our power that we are not only around, but super healthy at that time.
Wow. No, this, like I said, we did, for our listeners, please tune in to our version of 420, which was 520. And speaking with Paul, he's echoed a lot of the same sentiments that his peers have said regarding the cannabis space. 2020, year of the balance sheet. Make sure you are good. Behave like a public company. No, it's great because I had the pleasure of sitting on this side, talking to at least 5 or 6 different CEOs, and without you and I, we never had a pre-call conversation, and you're echoing the exact same sentiments. And we're not telling you who to invest in or what to buy if you're listening, but just keep in mind, if you hear a lot of the really good CEOs saying the same thing, chances are there's a reason. So that's my 2 cents. Wrapping up here, what would investors and people following 1933 have to look forward to? What are some of the milestones that you're looking to achieve, or things that you are
the only milestone that matters to me now is profitability. I would say that our industry, like a lot of sort of venture-backed industries over the last few years, prize growth over earnings. That's Uber, Grubhub, WeWork, Canopy Growth Corporation, et cetera, et cetera, et cetera. It was a unique time when venture was on. Venture was encouraging us to grow, even if we would sustain meaningful, if not substantial losses in the pursuit of growth. And the narrative has changed for not just the cannabis industry. Growth is great, but grow from profitability. If you have to keep on losing money in perpetuity or near perpetuity. So I can forget what I'm focusing on now, and I think this is echoed by other CEOs, is a path towards profitability as on an accelerated timeline as is possible within the boundaries and the challenges that any company faces. And I'm confident at 1933 that we're going to get there, just like I'm confident that the industry is going to get there. To date, there's very few companies that are actually profitable. There's accounting tricks, if you will, in biological assets that could show, but I measure it by like how much money went out the door and how much money came in quarter on quarter. And if more went out than came in, but you're using an accounting practice under IFRS, for example, as to how you value your biological assets, or if you're going to have to take goodwill impairments on stuff that you've marked up on your books, which there was a lot of that. Okay, I'll let the auditors and the CFOs debate but what I'm looking for as an operator is, do we have more money in our bank account at the end of the month than at the beginning? And is that a sustainable thing? And as long as the answer is yes to that, accounting for all contingent liabilities like tax bills, then that's what I call profitability. We earn more than we make. I mean, we earn more than it costs us to earn. And so that's what and I'm sure many other CEOs now in multiple industries are focusing on, specifically if you're a public company. It's very, very important to demonstrate to your shareholders that you have a commitment towards profitability at whatever scale. If you're at the Canopy scale, profitability means one thing. If you're at a smaller operator scale, profitability, it may be on different scale, but the goal is the same. It's to create businesses that can survive even a capital crisis because they're profitable.
And we're going to sign off here on a very, very green note of profitability. Paul, on behalf of the Canadian Securities Exchange, we just want to say thank you. Please continue to be safe. We appreciate your listening, and if there is anything that we can do to help, we will be here for you. So,
Barrington, what a pleasure. Great to see you again. Look forward to seeing you in person when appropriate.
Yes,
Keep up the great work. CSE does yeoman's work on behalf of the industry, and all of us that are on your exchange are grateful for all the service that we get from you.
Well, thank you. We appreciate it. Don't forget to subscribe to CSE TV on YouTube. Check us out on our website, www.thecse.com. We're on all the social media channels, LinkedIn, Facebook, Twitter. And yeah, this is Barrington Miller via Paul Rosen signing off. Thank you.